We're all fixated on oil, have been since the invasion. Where's oil?
It's down, but it's not down as much as it had been earlier. Before, it had been a pretty dramatic response. In fact, yesterday, ahead of these headlines, oil had been down 9%. So that was really the big decline. And then earlier today, down about 6%. Right now, down more than 2%, but still not a huge decline. But the bigger point is that it's a massive reversal from that surge, that parabolic uptrend that we had. And it will probably work its way down a little bit more, especially if you look at inventory. So many people are talking about the fundamentals. If you look at inventories, at least here in the U.S., yes, they're to the downside, they're negative, but not like dramatically so.
What happened to that $150 barrel of oil that people were talking about? Because several people were.
Well, I never saw it going quite that high myself. But, in terms of that, it's, markets are fickle. And also that was panicked buying. So all of a sudden you have all of these research and people and strategists out on the street talking about big numbers. I know that some people continue to think that that's likely. But when you think about the market in terms of just simple supply and demand and looking at it in a simple line chart, it looks as though you're going to see a reversal back down.
Abigail, do you have a sense of how much of this in the oil market, maybe because of China, because they're having such trouble? We now see half of Shanghai shut down.
I think that that's probably a little bit more of a headline, too. That was definitely a piece of the action yesterday. But at the end of the day, it's supply, demand, and price. And price in a very efficient market reflects all of these factors before the headlines come out.
So that's oil. What about stocks and bonds?
Well, you have a nice little rally for stocks, not a huge surge. Earlier today in the pre-market, you did have that NASDAQ 100 up more than 1%. Now it is up about 0.8%. You have bonds still up a little bit, actually up a little bit more than the last time I looked. The 10-year yield coming in by about 6 basis points. I think that the bigger point is that this risk-on sentiment that we've started to see over the last couple of weeks, it has continued. And these headlines regarding Russia and Ukraine, they help, frankly. It takes away one headache around the macro headache if they hold true.
Well, and to add one more part, the VIX, volatility.
Yeah, it's pretty amazing. That VIX has really fallen because a couple weeks ago it was close to 40 and it felt like it was going to just keep surging. And now you have that below 19, closer to, it's right at 19. You can make the case that it's going to go a little bit lower. It's so interesting. Things always seem to go further and longer in each direction.
Yeah.
And so when oil was surging and stocks were plummeting, it felt like that was never going to reverse. And that's right when the real people who have a real risk appetite, that ability to take on dislocations when other players aren't, come in, and now we have this big reversal to the upside.
You like physics so much. Maybe a little Newton law of physics, right?
Newton's third law, yes.
Exactly. So a little Newton we're going to do right in there. Okay. Thank you so much to Abigail Doolittle for that report on the markets.